Hello students and welcome back to my channel. Today I just want to explain another PPE question as requested, and this one is called WonderStruck Limited. We can read together. It's question number 3. It says WonderStruck Limited has the following fixed assets on 31st December 2016. And there you will find that they have listed for you an account as well as a rand value. So they say the equipment at cost was 500,000, accumulated depreciation on equipment was 60,000. You will see that the 60,000 was indicated as a negative, of course, because depreciation means that the asset is losing value because we are using it every day. We also have vehicles at cost, accumulated depreciation on the vehicles, furniture at cost, and then of course our accumulated depreciation on furniture, which is 20,000 rand. In the additional information, you will find 5 bullets where they tell you that new equipment was purchased on 1 June 2016 at a cost of 100,000 rand. This is important information, so I am just going to make a note for myself and say this is definitely an acquisition that I need to look out for and that I need to account for. Then new furniture as well. There we have a acquisition again that I need to account for. So you will see why I've chosen this question. It's because they have different acquisitions here that I think could be useful for you if you understand the principles. Then in number 3, they say equipment is depreciated at a rate of 10% per annum on diminishing balance method. Of course, I'm going to highlight that information. Very, very important for me to know which method they are using. Of course, we have 2 methods, straight line and diminishing balance. One means that I calculate the depreciation based on the cost price. The other means that I will calculate the depreciation based on the carry value. So here I'm just going to make a note for myself and say carry value. So I need to find the carry value in this calculation. Then number 4, vehicles are depreciated at a rate of 15% per year, also on diminishing balance method. Again, important information. I will again highlight, just indicate to myself I need to calculate the depreciation based on the carry value. Then furniture is depreciated 10% per annum on the straight line method. Very important information, straight line method. And again, I just make a note for myself to make sure that I remember. Now I need to use the cost when I am calculating my depreciation. The required part says you need to prepare the PPE note, the property, plant and equipment note. And this question does not give you a lot of information with regards to the required part, and they don't really try to lead you into the question. So please remember, it may seem very simple, just do the PPE note, but we must first do depreciation calculations. So you cannot just jump into a PPE note, and they don't necessarily have to tell you this. You need to start with the calculations for depreciation. So I'm just going to open a spreadsheet, and then we will start with our memo or our answer. So you will find that I am going to start with the depreciation calculations, because you cannot do a PPE note if you have not done these calculations. What is more is it's very, very important to remember that these calculations actually count a lot of marks. So please show the calculations. Don't just have a random depreciation value written in your PPE note. I don't know where you got it from. When you get your test back, you don't know where you got it from, and everything is just a mess. So just start with proper calculations. So I'm going to first calculate the depreciation on the equipment, because that is indeed the first asset listed to me. So I'm going to say depreciation on equipment, and there of course I have an acquisition. So what I'm going to do is I'm going to say I have of course my cost price, and I'm going to have my accumulated depreciation. Why do I account for accumulated depreciation? Because they tell me in number 3 that I need to calculate the depreciation based on the diminishing balance method. That means I need to calculate the carry value. So I will then get to the carry value after I have deducted accumulated depreciation. So I will have my total, then I will have my old equipment, and then of course my new or my acquisition during the year. If I look at the little summary given to me at the beginning of the question, you will find that the total cost price is 500,000 Rand on 31st December. So I'm going to say the total 500,000, and they give me the price of the acquisition in the additional information note number 1, and they tell me it's 100,000 Rand. Then I automatically know if my total is 500,000, I've purchased a new one for 100,000, that leaves me with old equipment worth 400,000 Rand. Next, I need to figure out my depreciation. What is very, very important about accumulated depreciation, your acquisition will never have accumulated depreciation. If an asset was only purchased during the current financial year, it can have no accumulated depreciation because we are only measuring depreciation now for the first time. So that means if I go back to my question and I look at the accumulated depreciation on equipment, that will exclusively be the accumulated depreciation for the equipment that is old. So there I'm going to say it is a total of 60,000. The total for all of the equipment is 60,000. And then I'm going to calculate the carry value. And that is simply the cost minus the accumulated depreciation. I get to a carry value of 340,000 for the old and then 100,000 for the new ones. After that, I can now go and calculate my depreciation based on my percentages. So for the old equipment, I am going to say 340,000. I am going to times it by the percentage given to me in note number 3 and the additional information, which is 10%. And then I'm going to times it by 12 over 12 because this is indeed the old equipment. So if I do that calculation, I get to an answer for depreciation for the old of 34,000 Rand. Then for the new ones, my carry value is 100,000. So I'm going to say 100,000 times 10% times, and now I need to be careful. I cannot just say 12 over 12 because I have not had this forever or for an entire year or in previous years. So if I go back to the question, they tell me in note number 1 that it was purchased on 1 June 2016. So what do? I take this date and I count from the date given of the acquisition up to the date given with the trial balance or the summary. So they tell me that the year ends on 31st December 2016. So I need to count for how many months have I used this asset. So if you count with me, you will agree it's on the 1st of June. So I could use it in June, July, August, September, October, November, and December. So that gives me a total of 7 months. So I'm going to say 7 over 12. If I calculate an answer for depreciation for the acquisition, I get to a total answer of 5833.33, and just for practicality I will round it to the nearest 4 Rand. So there I've calculated depreciation for the old and the new. That leaves me with a total depreciation of the sum of those two. So I will simply add them together, and that gives me total depreciation on equipment, again just rounded to a 4 Rand, 39,833 Rand. This is the calculation for my depreciation on equipment. Next, I want to calculate the depreciation on the next asset that I see in my summary, and that's vehicles. So just going to put a new heading, depreciation on vehicles. Here, just make the headings proper and bold so that you can read them when you print it out. Right, let's see again. What do they say about vehicles in this question? They tell me that the vehicles at cost is 600,000, accumulated depreciation on the vehicles 25,000 Rand. Then if I go to additional information, I don't see that they've purchased a new vehicle. Number 1 says there's new equipment. Number 2 says there's new furniture. So no new vehicles were purchased, and they simply tell me it's on diminishing balance method that I have to calculate my depreciation at a rate of 15%. So I'm simply going to say no acquisitions. This is an easy one. What is the cost then? The cost price for the vehicles is 600,000. The accumulated depreciation is a total of 25,000, and that leaves me with a carry value for this asset that is worth 575,000 rand. From this point forward, I can now do my normal calculation. So I'm just going to take the carry value and I'm going to say 575,000 times by the 15% times 12 over 12, because this is not an acquisition or any new assets that were obtained, so I can use an entire year. So 575,000 times that by 15%, times it by a full year, and I get to an answer of 86250. So there I've done my calculation for vehicles, and then I can move on to calculating depreciation on furniture, which is then the final asset that we need to calculate depreciation for. Again, you will find in this question that we have an acquisition during the year, because they tell me on 30 August they first got a new equipment that they've added there for 25,000 rand. So I know, again, I will have to split my calculation, but I'd like to refer you just to note 5 and to make sure that you see that this is on the straight line method. So to save myself some time, ladies and gents, I am not going to worry about the accumulated depreciation, because I only need the cost to calculate the straight line method. So what will I do? In this instance, I'm going to say, what is the cost price? Again, I will have a total. I will have old furniture that I've had during previous years, and then I will have my new furniture, which is the acquisition. The total that they provide me with for furniture in the question is 200,000, and you will find that they tell you the cost of the acquisition was, in according to note number 2, 25,000. So definitely the old should be the difference between the total and the acquisition, and that means I have calculated the costs that I need to do my calculations for my depreciation. So I'm going to start with the old, and I'm going to say it's going to be 175,000. I'm going to times it by the percentage of 10%, and I'm going to times it by 12 over 12, and that will give me a depreciation answer of 17,500 rand. I will also calculate for the new, which is now my acquisition, and it was worth 25,000. So it's 25,000 times 10%. And now I need to be careful, because I cannot times by 12 over 12. I need to go back to the question, find the date of purchase, and then count up to my year end. So they tell me the furniture was purchased on 30 August. So I need to count. I could not use it in August because it's basically very close to the last day of August. So I could use it September, October, November, and December. That is a total of 4 months that I could use it. Please note how we always calculate depreciation in months, not in terms of days. We always calculate depreciation in terms of months. So there, 25,000, 10%, and 4 months of the year, and that gives me 833 rand. I'm going to round it to 4 rand just to make sure that I have easy values to work with. Then the total depreciation for my furniture will be the sum of those two, and that gives me a total answer of 18,333. What I will do now is I'm just quickly going to highlight all my total depreciation answers for myself, and then I can finally compute or compile my PPE note. So I'm going to say it is the property, plant and equipment note, and here you should already know the layout by now. I'm going to have a column for each type of asset that I have, and then also a total column. So the first one will be equipment, the second one will be my vehicles, And then the third one will be furniture, and then of course I will have totals for everything, and in this column I will just add everything together horizontally. I start by saying cost on this in the information column, then accumulated depreciation. That gives me my carry value. Then I'm going to say depreciation for the current year, and then also my acquisitions during the year. And again at the end I'm just going to copy this again. I'm going to have cost, accumulated depreciation, and carry value. That is the layout I have to use when I am calculating my PPE node. So what do I start with? Well, I need a cost and an accumulated depreciation, but you need to be careful with those assets that now have acquisitions. So if I look at the assets that have acquisitions, it was equipment, so I just put it in. There's the 100,000 for equipment, and then also furniture, which was 25,000 rand worth of acquisitions during the year. So I will now just work backwards and just remind myself, then with equipment I only include the cost of the old here. So I will not take the cost of the new into consideration because this is a movement that I show separately on this note. So if I go back to my cost, to my calculations of equipment, I can find the cost there, and the cost of the old ones was 400,000. So then I'm going to put in the 400,000. Of course, the entire accumulated depreciation relates to the old assets. So then I'm simply going to say minus 60,000. And that gives me a carry value for equipment of 340,000. The acquisitions will be the new equipment. And then I'm just going to indicate the depreciation that I've calculated, which is that 39833. So there I'm just going to say equals minus this answer. And please note how I indicate the depreciation negatively while the acquisitions are positive, because depreciation means that this asset loses value. Then at the end, what will be my cost price? My cost will now be the sum of what I had at the beginning of the year plus my acquisitions. So it's those two, 500,000. And the accumulated depreciation will be the accumulated depreciation I had plus the depreciation during the year. So technically I minus it because I have a plus minus effect there in math. And that gives me 99,833. And then the final carry value for this equipment will be rounded 40167. I am then at vehicles. Vehicles was the easier one. There was no acquisition, so I'm just going to say 600,000 minus 25,000. That gives me a carry value in this instance of 575. I had 0 acquisitions, and I did calculate my depreciation. So I'm going to go to my calculations. Depreciation was 86250. I'm going to indicate it there. Again, the cost price will be whatever I had at the beginning, and I'm going to add the acquisitions, which are in this case nothing. And also the same with the depreciation. I'm going to take the 25,000 I had, and I'm going to further make it negative with 86250, which gives me 111,225. And again, I am just going to get the difference, which gives me 488750. Again, I am then at furniture. I've indicated my acquisitions, so I'm only going to indicate the cost of the old. If I go to my calculations for furniture, the cost of the old was 175,000. Accumulated depreciation was given to me as 20,000. That gives me a carry value at the beginning of 155,000. Then my depreciation I have calculated, so I'm just going to show it as a negative. And again, I'm going to say the cost at the final part of this PPE node is then the cost of the old, and I'm going to add the acquisitions value. And thereafter, I'm going to say The accumulated depreciation is the depreciation at the beginning, and I'm going to make it further negative with the depreciation of the current year, and that gives me 38333, leaves me with a final carry value of 161667. Then further, I just need to get to the totals, so I'm simply going to add them together horizontally to get to a final answer. And this is quite easy if you are using Excel. You can just drag the function. For you, you will have to type everything into your calculator, but I think it's quite simple math to do, nothing special there. And I've added everything up, and there I have completed my PPE note, just rounding off to a full rand there. And that is then how you should compile a PPE note. Don't think at this point it is too difficult for you anymore. Just a matter of really practicing, making sure that you understand. But yes, it's as simple as that. If you start with your depreciation calculations, I don't think you can really have much trouble in doing this. It's just that students don't do the calculations first, and then they just confuse themselves, don't know where to start. So please start with the depreciation calculations, and I think from that point forward, you will just be absolutely fine. Thank you so much for watching this video. I hope that it has helped you a little bit. Please stop by my office if you have any further questions. If not, I will definitely see you in class. Bye-bye.